Good morning, thank you for watching this market snapshot from LCG. So we just had some quite interesting data, UK economic data that is. Inflation is now up at 2.9% year over year. Sounds like a dull figure by itself, but the Bank of England targets 2%, so well over that Bank of England target. It's in fact higher than the Bank of England forecast it would ever get in the next couple of years. So clearly prices are running away a little bit here. Typically, this data by itself means the Bank of England really should be hiking rates. But the reason that we saw a slightly muted reaction in the British pound, and we're going to have a look at the chart in a second, is that it's only one piece of the pie. The next important element is what is wage growth doing? Because if wages are still steadily trundling along somewhere in the 2% region, obviously inflation's above that wage rate, it means a squeeze on the cost of living. And so that's going to be a worry for the Bank of England and a risk to the UK economy as we go into the Brexit negotiations. And so just a convenient excuse really for the Bank of England to hold off on in fact hiking rates. So it's not necessarily as bullish for the pound as it could be. And obviously we've just come off the back of this big drop in the pound after the election. So we're going to have a quick look at the charts now and see what this all means. So just looking at the short-term 1 hourly chart, you can see we've got the beginnings here of a potential double bottom in the cable rate. So the key one being this election low here in and around the sort of 126.30 kind of vicinity. We've tried to test it 2 times, tried to break it 2 times, failed to do so. We popped up here. Most of this move actually took place pre-data. Obviously always generates a bit of conspiracy theories that the data was leaked early. It's possible, but obviously people predicting the data correctly or knowing the data, one of the two, the pound has spiked higher, but it kind of stalled out as we actually hit the data around this kind of 50 period moving average on the 1 hour chart. If we get a bit of context for this, get into the daily chart, you can see this was the big level that we took out on election day. Yesterday, we tried to come up and break through it again. We failed. We dropped right back to the election lows. Here we're bouncing again from the election lows. But as you can see, we're still well below the 20 and 50-day period moving average. The trend is to the downside here. And so the risk is that we get a little soft wage growth data tomorrow, perhaps. Could be one of the reasons, perhaps depending on what the Fed do as well. Obviously, if the Fed are extra hawkish, that's some US dollar strength can contribute to sterling weakness on the downside too. And that may see us come challenge the 126 mark. Or I would say quite possibly more likely is that it would be a re-challenge of this broken downsloping trend line, coincides quite nicely probably, given the rate of decline, with that 125 handle. How does this compare on euro sterling? Well, you can see that actually the pound has dropped to a quite significant level. So the pound has dropped, the euro sterling pair's rallied up to this 0.8850 level. This is the highs from January, it's the highs from this year, and it's there's not too much in the way of resistance once we get above this. So potentially this could cap weakness in the pound and send the euro back down again. Or if we do get a break of this level, then it's quite significant and we could see the euro rally against the pound quite significantly. So a key breaking point here potentially. Right, thanks very much for watching the market snapshot today. Let's see how the pound develops for the rest of the day after this inflation data, and let's see how the data comes out tomorrow. That's Wednesday on wage growth data and employment rate as well. That'll all contribute towards the outlook for the pound. If you do enjoy these videos, of course, please follow LCG on social media, Twitter, YouTube and Facebook.